To this special broadcast, we're coming to you from GLS, the Global Leadership Summit, where CNBC TV18 is marking 25 years. I have with me a very special guest. Mr. Chauhan, thank you so much for joining us, being a part of this event. Tell us your quick thoughts. CNBC has been mapping the economic journey of India over the last 25 years. What to you has been the role that CNBC has been performing? How has CNBC been a contributor to this journey?
For me, first, the congratulations, hearty congratulations to all the CNBC viewers and CNBC team. It has been a wonderful journey. A country like India, which is coming up, which is developing, it requires correct information, timely information, and correct advice. And somewhere on the line, I think CNBC has played that role. So we, sitting in exchanges, we are really proud and we are really happy that we have the media like CNBC, which is able to provide information not only in English but also in other languages to all the investors about what is correct, what is not correct, what to do, what not to do. Because in investments, it's also important to tell what not to do. Yeah. It's always exciting to go after things which are sort of going to do well. But also there are precautions to be taken. It's a risk capital. And for me, in some ways, the stock markets are the markets for risk, but they also create trust. Trust in the entrepreneurs, trust in the system, trust in regulators, trust in Indian system. And I think it's very difficult to create that trust, very easy to give up that trust. And I think CNBC TV18 group is playing a great role in ensuring that the trust is maintained, and whenever any part of the ecosystem errs, CNBC cautions them. I think that is the biggest function you guys perform in terms of showing the mirror, and that's very important.
You mentioned the word trust. I'll take cue from that. The retail investors, I think that's been a turnaround story over the last 24 to 36 months. The retail investors have reposed their trust in the Indian exchanges, in the Indian equities. How do you see this momentum going forward? We're slightly on shaky ground at a 5-month low. Is that something you think that will test the patience of the retail investor?
When I started NSE in 92, we had probably 1.5 million investors. Today we have 105 million investors, unique investors, right? So we have, we will have ups, we will have downs. That's the nature of the market. But as and when India becomes more prosperous, more people come in to the middle class, they have more money for consumption, but they also have more money for savings. And there are a variety of options, which all of you keep on discussing on gold and silver and real estate and fixed deposits, but stock market is also there. And for me, I have seen a jump in interest. And why? Is because young people are coming into the job markets at their young age. They are earning more than their parents at retirement age. And they have more to consume, but more to save. And the stock markets are a place where they can do the transactions, they can invest and also reverse the sort of investment at an extreme low cost. If you go to, say, real estate, it costs you 5-7% across India minimum to just do the transactions with stamp duty and all. If you go to gold, again, you don't know whether it is correct gold or where will you store it and other things. And of course, in fixed deposits, you keep it, but once the returns come, the taxes are slightly higher. Overall, last 10 years, as per the, I think, one of the reports, India has saved only 3% of its savings into equities. The incremental savings, only 3%. But it has given 20% more wealth. So equities have given 7 times more returns compared to other asset classes. And that's why you see more and more people are coming. But broadly speaking, this is a trend across the world, more prosperity, more people going into the equities market. But there is another side to it, that when you invest in stocks, you invest in companies. And then new plants get made, new services get offered, and more jobs come in. And then those people invest money, save money, invest money. So it's a virtuous cycle. You invest money in gold, nothing happens. It goes into your vault at most. Somewhere on the line, the only channel which is channelizing productive capital effectively, efficiently into industry is stock markets. It's creating wealth, but it's creating jobs.
One final question for you, sir. 25 years, it's been an exciting journey. Let's get a broader picture from you. India over the next 25 years, what are the broad trends that you see? You mentioned retail investment, and the confidence of the investor is certainly one that you've seen. But over the next 25 years, what are the big indicators to watch out for? What would your assessment be? How does the next 25 years look?
The last 25 years are any guide, which they should, because what has happened, the acceleration of technology and technological progress has been immense in last 25 years, but it's increasing even faster. And so there is a corollary to that. That is earlier, when we were young, in early 90s, if you had to become an industrialist or a businessman, you had to put in a lot of money, which none of us had. And so most of us didn't even think to become businessmen. And slowly, after looking at all the IT czars, Nandan and Narayan Murthy and everyone else, some people came up saying, no, now you don't require that much capital. We can try harder, and hopefully with less capital or zero capital, we can still make it big. And so the earlier capitalism was a lot of capital to create more capital. New capitalism of India is capitalism with very little capital and exchanges through that.
Smart capital.
And also patient capital, but also low. You don't require that kind of capital. So more and more Indians, because India has been perennially short of capital compared to the rest of the world, but we are not short of talent, right? We are abundant in talent, and now exposure across the world, confidence is there, and I think next 25 years, you will get even better returns and better growth. If India grew at 6.5%, 7% over the last 25 years, average, next 25 years, it's going to grow probably 8-9%, given the acceleration of technology and the way India has now emerged as the best technology using country in the world. And that's where I think I have a tremendous hope that more returns will come from the markets and more people will participate in the markets.
So young India, new India, confident India. Mr. Chauhan, thank you so much for being a part of this, not just this conversation, but also a part of GLS. This journey, this day would not have been complete without your participation. Thank you so much for being a part of this. Lovely having you, sir.
Thank you, Mr. Agarwal, for speaking